Just tell us more about what we know so far.
Right. So Chinese state banks are offering, loans with ultra-long tenure to LGFVs, which are the, borrowing arms of local governments across China. So what we're hearing is China Construction Bank and Industrial and Commercial Bank of China are giving loans, with tenure up to 25 years to the sector instead of, the 10-year prevailing loans, that's for most corporate borrowers. So as for why they're doing this, obviously the LGFV sector is in desperate need of some financing help, because of deteriorating finances of local governments whose spending on COVID control during the outbreak in the last 3 years has surged, while at the same time their income from land sales, which is a key source of financing for local governments, have kind of dried up during the property market downturn. So anyway, this shows that just how desperate the sector is, looking for help. They are desperately looking for financing, as the credit crunch is increasing amid the economic slowdown.
Okay, I mean, Charlie, part of this is also very poor tax collection rates as well. But the question remains, why do it? Why do it now? And what are the implications overall for credit markets? And then, of course, you have to look at the broader economy as a consequence.
That's a good question, but because, as you know, we don't know the total amount of such loans given to the sector. Also, we don't know the number of LGFVs are receiving, are getting this kind of help. So we don't know the exact impact. It's too early to quantify, to give a precise assessment. What's being made public is, at the end of last year, there's a LGFV in the impoverished Guizhou province in southeast China, who, got one of his loans, $2.3 billion facility, extended by 20 years. And in the first 10 years, the company, doesn't, under the agreement, the company doesn't need to pay any interest. The company doesn't need to pay, will need to pay interest only for the first 10 years and pay the balance, in installments of the next decade. As for the impact on the economy, obviously this is, it can be seen as a part of measures to show up the economy, because the recovery after the reopening has slowed down, and state banks have been, turning on the credit taps to, pump more credit into the state sector and also infrastructure investment. And at the same time, banks have been cutting interest rates, lowering borrowing costs for both individuals and corporates as well.